Hello traders. The title of the video is Elliott Wave trader versus a Bitcoin wave forecast. Alright, so I have been asked by traders to record a more tutorial about the Bitcoin cryptocurrency, and I did post the first video recently, and the title of that video was Elliott Wave Trader talks about the cryptocurrency Bitcoin. Elliott Wave Trader talks about the cryptocurrency Bitcoin by 24 Elliott Waves YouTube channel. Digit 2, digit 4, Elliott Waves in plural. YouTube channel. Today we want to talk about Elliott Wave Trader versus Bitcoin wave forecast. All right, so we want to talk about what is in store for Bitcoin, how far it can go. All right, like an intelligent Elliott Wave trader. All right, so we don't want to concentrate only on the technical analysis using the Elliott Wave pattern or the Elliott Wave forecast. We will go a little bit deeper, looking at the different scenario that can happen when we are talking about the forecast of a Bitcoin cryptocurrency. All right. By the way, I want to remind traders that I have not changed the setting of my audios. So there was a comment earlier on the first video that it was not very good. It was not too bad. It was not very good. So what I want traders to do, let me know in the comment section if this is still the case, because I did not change it. There were a problem before, I fixed it. They say it was okay. Since then, I did not change my audio. So let me know again whether this one also there is still some improvement needed to be done. All right. So 2 or 3 traders, your comment about the audio will be very useful. All right. Tell me exactly what is happening. Okay. So let's begin our discussion today. Elliott Wave Trader versus Bitcoin wave forecast. All right. So as I was telling traders in the video that I mentioned earlier on, all right, we did count 5 waves. So first wave, second wave, third wave somewhere here, fourth wave, and the fifth wave. So the waves that we are talking about is the wave that we are talking about are the Mano waves of the first wave of a higher degree. So 1, 2, 3, 4, 5 will form the first wave of a higher degree. So that's what I put here, 1 in black. All right, by the red numbers are identifying the Mano wave of the first wave of a higher degree. If you go to the weekly chart, you see what we are talking about. So here we are. First wave, second wave, third wave up to this point somewhere here, fourth wave, now the fifth wave is up somewhere there. We are now in a corrective phase. So in my humble view is that the Bitcoin cryptocurrency has completed the first wave of a higher degree. So that first wave has been subdivided into 5 Mano waves. It's what we call in the language of Elliott Wave the motive wave. So there is a motive wave that is completed on the monthly chart. All right. So just looking at this, the shadow on top here is telling me that a correction has already started. As I show traders also, we discussed this before, that whenever you go on a yearly chart, here it is, you see the shadow like this. This is indicating to us that a type of correction is already underway right here. This shadow here is alerting me that a multi-wave or an impulse wave of a certain degree is completed, at least on the monthly chart. So how can we forecast the next price action for the Bitcoin cryptocurrency? All right? As I told you at the beginning of this tutorial, we will not stop only on technical analysis, we go a little bit deeper. So the first thing I want to tell traders that want to use the area wave principle like an intelligent area wave trader or like a smart area wave trader is that the Bitcoin or any cryptocurrency, all right, is very, very volatile. So 1 minute is up, 1 minute is down, and can come down very fast. So it's very, very volatile. There is no central bank that is controlling this cryptocurrency, Bitcoin, or any cryptocurrency. So this is a problem. So when there is no central bank, or there is no central bank. So if you are trading Bitcoin or you are investing in Bitcoin, it's a speculative investment. It's a high risk investment. So if you are very, very conservative area wave trader, you may have to wait until the dust has settled, meaning that the second wave is completed before you will think of a proper investment. Or you wait until we have the central bank or Federal Reserve, controlling the dealings of Bitcoin or any other currency. So there is no central bank at all. You see, in Europe, for the euro, we have the ECB. In London, for the British pound, we have the Bank of England. In Japan, for the yen, we have the Bank of Japan. All right. In Switzerland, we have the Swiss bank. There is no central bank to control, the cryptocurrency, including the Bitcoin. So talking about intelligent area wave trader is a speculative trading, it's a speculative investing. Anything is possible. So what can happen? Talking about forecasting the scenario, that can happen for the Bitcoin is that now you see it went up nicely. So what did we say to traders? The first area wave is what? The signature of the bull. The first area wave is the signature of the first bias. All right. So talking about the higher degree first wave that has been subdivided into 5 minor waves, which has ended here. That first wave of a higher degree is the activity of the first bias. People who were smart enough knew that this cryptocurrency, Bitcoin, is likely to go up. They have done their homework, and they are the ones that have created this Bitcoin. As I told you, because there is no central bank and it's quite volatile, all right, anything is possible. What usually takes place when we see the first area wave, which means the signature of the bull or the signature of the first bias, all right, in normal condition, talking about stock, commodity, futures, or a normal currency, normally the first buyers do not give up because they have done their homework and they believe that a trend should stay in place. And for the trend to continue, my friend, for the trend to continue, all right, those first buyers should participate in the trend. They should stay put. But when we are talking about forecasting Bitcoin, all right, though there are first buyers in place, it's a speculative trading activity. Those first buyers may not support the trend. They may not participate in the trend, which means Bitcoin may come back down to the beginning. So it's not a normal first wave, it's a speculative first wave. There is no central bank, and it's very, very volatile. And also talking about the capitalization of the cryptocurrency market or the Bitcoin market, all right, is insignificant in comparison to the foreign exchange market, the general the normal currency. So talking about forecasting the Bitcoin, it's a speculative trading activity. Any forecast that we are doing today is a highly speculative. I'm choosing my word carefully to warn those who are trading Bitcoin or any cryptocurrency. No central bank, highly volatile. What is likely to happen? Listen carefully, talking about being a smart area wave trader or being an intelligent area wave trader, is that when suddenly the government or the Federal Reserve, they start making decisions, or the LCC, okay, the American financial regulators, start making decisions regulating the cryptocurrency, there is a high chance that many cryptocurrency will come back down, which means return to the mean, they will come back down, which means we will start afresh. So a regulation coming in will make it very, very volatile, very, very speculative, and this trend that we are seeing today may come back down, which means a new rule is now in place to determine the game of cryptocurrency. Now, when it comes into cryptocurrency trading, the name of the game is what? Volatility. If you are a conservative Elliott trader, if you hate uncertainty, wait for the second wave to be settled. Wait until those cryptocurrency, including Bitcoin, are regulated by central bank or the government one way or another. At this point in time, it's just speculative with a forecast. This is about adopting the mindset of a more intelligent Elliott trader. Very, very important. So we will not talk only about technical wave count, wave forecast. We want to talk about everything else that we need to know at this junction, so we do not go and do all kind of crazy things and lose our children money. That's not good at all. But for some traders, they like the volatility, they like the risk. So if you have some spare money, if you lose it, you will not cry. Well, play with it. But if you are a conservative person, be very, very careful, because it's not regulated, there is no central bank, and it's highly volatile. All right? So talking about now, let's go back to the technical analysis. All right, we can see talking about how we use the first wave and the second wave to forecast the multi-wave. All right, so now we can see the structure of this first manual wave of the first higher degree wave. It's the first manual wave of the first wave of a higher degree. It's only one move up here. There's no structure that can help us to know exactly what has happened here. Again, looking at this first wave of a higher degree, the one from here all the way up here, looking at the structure of that first wave, all right, we can use that fractal pattern. Remember fractal pattern? The fractal price structure of this first wave of a higher degree. Right? We can use that to forecast the whole multi-wave of Bitcoin. Do you remember? Right. So if you have been following us, there are videos about how to combine fractal trading and Elliott wave like a pro, and check them out, all right? And you can use that to forecast the whole multi-wave. So for those reasons, I have done my bit of my homework. The pullback of this second Elliott wave, second manual wave, see, the second manual wave of the first wave of a higher degree will help us to determine, will help us to have a bit of idea how far this corrective move will go down. So the retracement, the Fibonacci retracement of the second manual wave in relation to this first manual wave of the first wave of a higher degree is 61.8% Fibonacci retracement. All right. With that information, all right, we can say that the second wave of a higher degree, all right, has a high chance to come near the 61.8% Fibonacci retracement level of the first wave of a higher degree. That's exactly where we are now. We are now at 61.8% Fibonacci retracement of this first wave of a higher degree. So this information has been useful so far. That's why there were some bias here. In fact, we are now in the sweet spot Fibonacci trading zone for this first wave of a higher degree. So you may say to me, John, what is a sweet spot Fibonacci trading zone? I will send you directly to www.dayprotrader.com. Click on sweet spot Fibonacci trading zone. It's the zone between the 50% and the 61.8% Fibonacci retracement level. That's where we are now. So does it mean that definitely the third wave of a higher degree will begin here? No. Remember everything that I've said so far. No central bank is very volatile. Anything is possible. All right. So we need to be very, very smart and prudent when we are dealing with Bitcoin or any cryptocurrency at this junction, talking about Elliott wave forecast. Though we are here now, again, okay, I don't wear glasses, all right, so if I see clearly here, you can see that he went down. Look at the second way. He went down a bit, all right, and then went up a bit, and then come down. It looks to me like a 1, 2, 3. It looks like a zigzag, yes or no? So you roll it down a bit, and then roll it up, and then roll it down. So talking about the structure of the second minor wave of the first wave of a higher degree, we can predict or forecast that the correction which will form the second wave of a higher degree may end up being a zigzag pattern. 1, 2, 3. I talked about this in the first video that we posted. Let me remind you again about the title of that video. Elliott Wave Trader talks about the cryptocurrency Bitcoin. I'll try to remember to put in the description section. If I forget, remind me again and I will put it there, okay? So we will expect the correction, all right, looking at the structure, the fractal price structure of the second minor wave of the first wave of a higher degree, that is likely to be a zigzag and is likely to end at 61.8% level. But there is a bit of problem here. The price already at 61.8% level using the structure of the second minor wave of the first wave of a higher degree, but we do not have a zigzag yet. All right. So that's what I discussed with you in that first video. So there is a high chance the price may bounce up to this level of 1200, 700, 12 correction to the level of 12,714, 12,714 before coming down like this. It's an expectation. The forecast is an expectation. It's not guaranteed that the price will definitely do that. We don't have a certain bank. It's also volatile. The price may continue to go down all the way here. So if, for instance, tomorrow, all right, the LCC, which is the financial regulator of the United States, make a decision, all right, against the Bitcoin, it may come down very fast. There were a lot of people very, very saying that very bad thing about Bitcoin. It may run down in straight line, forming a sharp correction all the way here. So, but in normal condition, hopefully it won't be too bad. It will go gently. The market will allow it to go gently there, and then come down like this. But if everybody starts selling it, it will come down in a straight line down here. So talking about the wave forecast for Bitcoin. First forecast, the correction, we are the first wave of a higher degree is completed. We are now in the second wave of a higher degree. All right, my friend. That second wave can end at 61.8% level. That second wave can be a zigzag pattern. We are already at 61.8% level, but we do not see yet a zigzag pattern. Will the price form, okay, the zigzag pattern going to the 12,714 before coming down? We will see. All we do, we are expecting something. So if you do your forecast, you expect, it's an expectation. You mark it down, you look at different scenarios that can happen, as I told you yesterday in that video that I'm referring to all the time. In my view, it will be better for Bitcoin to form a zigzag pattern for the correction. Even to form a sharp correction, that will be reasonable, which means the dust has settled, and then from that point, the best time for the regulators, central bank or anybody else to regulate the cryptocurrency is when the correction is completed. So it may become very messy if, for instance, all right, the correction is not completed, talking about the second wave of a higher degree. So I'm speaking to LCC, I'm speaking to the Federal Reserve. You may say, Joe, who are you to speak to them? Because sometimes, you know, the regulators can talk to the analysts before making decisions in order to avoid market distortion. So, personally, for a regulator to make a decision, it will be better to work with the market structures, all right, instead of creating a mess. So it would be nicer for the correction to be completed, and at that point, for LCC or a regulator or a central bank to come in and to start regulating this, volatile cryptocurrency. That will make more sense, all right? All right. So this is the first forecast relating to the second wave of a higher degree. So now we are 61.8% level. Is it going to start the third wave of a higher degree from here? We will see. It may do it, it may not do it, but we will see. But as things stand now, no central bank, no regulation, very volatile. I'm not expecting that. You do not have to take my word for it. You do not have to believe everything that I say. You have to make your own decision. All right? So, if we have a normal second wave, what do I mean by normal second wave? A normal second wave or a healthy second wave should not cancel the first wave. According to our wave counts, at www.24elliottwave.com, there's no more second wave, should not come to the starting point of the first wave. It should come all the way to the beginning of everything. So I'm choosing the beginning of everything at the level of 105. So some people may say, Joe, that's not exactly, but I prefer to use that. 105 is an easy number for me to remember at the beginning of everything. All right? If we have a normal second wave that does not cancel the first wave, we can now forecast the third Elliott wave. So now I'm going to talk about the forecast of the third wave of higher degree. All right? So I'm going to choose my word very carefully. Provided that the second wave is a normal second wave. In other words, provided that the second wave does not cancel the first wave of a higher degree, we can start forecasting the third wave of a higher degree. But if the second wave cancels the first wave of a higher degree, as I explained to you coming to the beginning right here, my level is 105. All right, what do? We will restart counting the wave. So that's what I'm saying to you. For the regulators to come into the cryptocurrency, either the second wave of a higher degree is completed in an orderly fashion, or the second wave cancel completely the first wave. And then they come in, they set the rules. Now we may have a central bank controlling the cryptocurrency, including the Bitcoin. Now in that case, we will restart counting the wave, which we will ignore this first wave of a higher degree, and we will be expecting a new first Elliott wave, talking about our wave count guidelines at 24elliottwaves.com. Remember, talking about wave count, we don't want to forget what other traders may do. So going into the mind of other traders, though sometimes the second wave may cancel the first wave, but other traders will ignore that and we still validate it or call it as a first wave. So when we are using our own wave count guideline, we want to go also into the mind of other traders. So when we reach that point in time, I'll come back and talk about it. All right? So very careful. So provided that the second wave is a normal second wave and it doesn't cancel the first wave, we will expect the third Elliott wave, all right, to go at least to which level? At 161.8% Fibonacci extension level of the first wave of a higher degree. So this is our first wave of a higher degree. I'm choosing the low of that first wave as the level of 105, though it's a little bit below it, but I prefer that because I can see on my chart here, I can't see everything, so I'm working with what I can see, all right? I'm using my eyes. Keep your eyes wide open. So I'm using 105. So we will apply Fibonacci extension to the first wave of a higher degree. I will use a conservative measurement. Why? So if you want to forecast something, you can do, a forecast using a conservative measurement. Right? So the conservative measurement means that in a normal condition, all right, without being too much bullish, without exaggerating too much, there is a high chance that the price may touch that level. The price may exceed that level or go beyond that level. But minimum, or in a normal conservative fashion, can we see that? All right? Reasonably, we will expect it to hit that level. So for the third wave forecast, provided that we have a normal second wave, I will apply the Fibonacci extension to my first wave of a higher degree. Now, what am I doing? I'm choosing the low as 105, and I'm choosing the high as the level of 14,503. You can see that I didn't bring it all the way to the top here, though our first wave of a higher degree did go to the level of 18,755. But in order to focus the third wave of a higher degree in a conservative fashion, I do not want to use the shadow here to go to the top. I use the closing price. We can use both. Well, we can use both. We can use both to see, to have the two level, the two forecasts. But I want to use the conservative measurement because it's volatile. There's no central bank. It will be crazy to use the wildest forecast. All right, prudent. We want to be smart in your return, more conservative, and we know exactly what to expect. All right. So using that conservative measurement of the first wave of a higher degree, all right, there is a resistance that I want to mention here. What is that level? The 138.2% Fibonacci extension level of what? That first wave of a higher degree. Which color should I use now? Color it peak, right? Have another peak line here, change it. So I know exactly how much to cross there instead. This one also, I'll change it. I'll use dark green for that one, okay? So that's the pink line there. 20,000, right? 49, remember that level. For 20,000, okay, 49, all right? So if we have a normal second wave and the third wave is underway, the critical resistance that Bitcoin traders or investors should not ignore is 20,000, right? 49. Traders that are following us at DayPro Traders YouTube channel or traders that subscribe to our website, dayprotrader.com, know why 138.2% Fibonacci extension is a critical resistance level. We will not talk about a third area wave if it does not go above that level. So if, for instance, we have a normal second wave and we see the price that going down, we'll say, all right, probably this is the third wave of a higher degree. So if that third wave of a higher degree comes to this point, well, know that it's a resistance, but it must break above that resistance before we can validate that as a real third wave. All right? Well, am I talking to you? So that resistance at 20,049 is a critical resistance level because it's the 138.2%. In fact, I don't use 138.2, I use exactly 138.0. But the correct Fibonacci extension is 138.2, but 138.0 works beautifully, and that's why I use all the time. So the 138, I will say 138.2, but just know that I'm using 138.0. 138.2% is that level 20,049. In mass spec is a critical resistance level. All right, very, very important. All right, but if it breaks above that level of 20,049 and finds support, all right, where is the target for the normal third wave? According to the area wave principle, the normal third area wave, all right, does not go beyond, it does not go above the 161.8% Fibonacci extension level of the first wave. So because this is our first wave of a higher degree, Remember that I'm using a conservative measurement instead of bringing here, putting a closing price. I'm using 105 as the low. All right. That normal third area wave, if it's underway after a normal second wave, the first ultimate target for that third wave of a higher degree should be at 161.8% Fibonacci extension level of the first wave of a higher degree. So the conservative target, remember that I'm saying conservative because of how I place my Fibonacci retracement, 105 and this level of 14,503. If you use that, the normal target for the normal third wave will be at, let me tell you now, 23,295. You cannot see on my chart, but I calculate it with my calculator here. Right? So if you want to calculate it, what you need to do is to use 14,503 minus 105. Right? That will give you the range from here to here of 8,897. Is that correct? No. Sorry, my apology to trader. If you do 14,503 minus 105, that will give you 14,398. Should I say it again? I won't say it again, all right? So the 14,398, you multiply it by 61.8%. You do that, so 14,398 multiplied by 61.8% will give you 8,897. So now you add that 8,897 to this level, to the level of 14,503. So by adding 8,897 to 14,503, that will give you the level of 23,295. That's the conservative target for a normal third wave. It may not reach that level, it may come near it, it may reach it, it may go above it. But according to the area wave rule, a normal third wave, will not very often, right? Very often, will not go above the 61.8% Fibonacci extension level of the first wave. But sometimes it can go a little bit above it, only to come back down. So don't be too strict with that rule, okay? All right, but so the target, the conservative target, is 23,295 using a conservative measurement of that 161.8% Fibonacci extension level of the first wave of a higher degree. But if you use it, if you measure it all the way to the top, roughly, instead of 23,295, we may exaggerate and say that it can even go that the third wave of a higher degree, all right? If it's a normal third wave, without using a conservative measurement, the target for that normal third wave without using a conservative measurement will be 25,767. Roughly. It's not exact. All right. So this is the target forecasting a normal third wave that could reach, all right, the 161.8% Fibonacci extension level of the first wave of a higher degree. All right. So those are the key levels that we want to work. So talking about key level, the first key level that you don't want to forget is 20,049, which is the 138.2% Fibonacci extension level of this first wave of a higher degree. All right, using a conservative measurement. That's what I'm using now. I didn't go all the way. Conservative measurement, 138.2% is 20,049. Note it now, it's a very important key level. You can also use the other measurement, go and bring it all the way to the top. So you may have it also there, all right? But you can't see on the chart because if I put it there, you will see 138.2% level. We don't have space to see it, all right? But just remember that, okay? Apart from that, if you have a normal second wave, all right, and the third wave is underway, the conservative target for that third wave at 161.8% level of the first wave of a higher degree is at 23,295. Without the conservative measurement, can go to 25,767. But this is just about a normal third wave. Remember, if the third wave is extended, are you with me? If the third wave is extended, which means it's not a normal third wave, but it has been extended, the target that I mentioned to you now, 23,295 or 25,767, it may go beyond that level. So we'll be watching the level of 200% or 261.8% Fibonacci extension level of that first wave of a higher degree, even a 314% Fibonacci extension level of the first wave of a higher degree. So those are the forecasts that we can make today about the normal third wave of a higher degree, talking about Bitcoin, cryptocurrency at this junction. So I will not talk about the fourth wave forecast at this junction because we want to see first the third wave, then we will start forecasting the third wave before we start forecasting the fourth wave. Usually we'll use the 38.2% Fibonacci retracement level of the third wave as the first forecast for the fourth wave, but there are many other ways that we can forecast, all right? The fourth wave, which we talked about before, all right, talking about wave forecast, all right, so I will not go back to those things again, all right, and then we can, when the fourth wave is completed, we can also use, you can see here, it's a very tiny first wave, isn't it? So we'll talk about equality. All right, now here we are. So it's because we are talking about higher degrees, so we will use the magnitude. It's quite wide. I doubt it that we'll have equality between the fifth wave. I doubt it. I doubt it. It may be a tiny first wave or a tiny fifth wave. So when the fourth wave is completed, then we can talk about the equality between the first wave of a higher degree and the fifth wave of a higher degree. We will use that to forecast the end of the fifth wave for Bitcoin. But at this junction, we don't have enough data yet. The third wave is not yet completed. Even the second wave is not yet completed. Though I did mention that we will prefer either a zigzag pattern for the second wave of a higher degree or even a sharp correction. I understand that for the second wave of a higher degree, we can have a zigzag, we can have a flat correction, which I talked about in the first video that I referred to in the early stage of this video. We can have a zigzag, we can have a flat correction, we can have a WSY, which means a complex correction, a double zigzag, a triple tree, or a WSY, wave. Those are possible because if the regulator doesn't come in quickly, and we keep going like this, we may see a complex correction, which means people will be talking, discussing, and say, what do we do with this currency, this cryptocurrency? And because we have today, according to the information that I have gathered, there are about 15,000, is that correct? Correct me in the comment section if I'm wrong. There are about 15,000, is it 15,000? 15,000 or 50,000 cryptocurrency out there. So, as I told you in the first video, there will be a shake-up. So, the regulator may come in, or there is no central bank. They may have something, the central bank may take hold of it. So, all this, taking into consideration the number of cryptocurrency that we have today, all right, is the second wave of a higher degree has a high chance to become a complex chain, a second wave of a higher degree. Or you may even cancel this first wave of a higher degree because it's very volatile and there is no central bank. So at this junction, how long have I been talking to you now? 38 minutes is reasonable now. We need to wrap it up. So at this junction, all we will say to traders, talking about Elliott wave trader versus a Bitcoin wave forecast, all right? We need to adopt the mindset of an intelligent Elliott wave trader. All right? There is no central bank and there is no regulation at this junction. If they start regulating Bitcoin and other cryptocurrency, they may come down very fast, which means we'll start afresh new rule come in to determine the game of the cryptocurrency trading or investing. All right? So that's a possibility. So that's one forecast that the cryptocurrency, including Bitcoin, when they start regulating them, they may all come down, boom, 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 down. We don't know how far they can go, how far they can go down, the correction will be. It depends on what the regulator may do. So that's one focus. Don't forget that this is not about technical trading. This is about being an intelligent alien, a trader. Okay, very, very important. They are volatile, which make a have even a sharp correction. So you see here in bar, you see it came down quite volatile. Now we have this green one up. It may come back again, 1, 2, all the way down here. You may wonder what's going on. They are very, very volatile. So the forecast that we made about the second wave is a speculative forecast. Trading Bitcoin or any cryptocurrency is a speculative trading, speculative investing. Wave forecast related to Bitcoin or any cryptocurrency is a speculative wave forecast, very volatile. Anything is possible. All right. So those are the things we need to understand before we go a little bit deeper. Now, there's a high chance that the second wave may not be a normal second wave, which means it may cancel it. If that is the case, hopefully they will start regulating, hopefully the central bank will get involved, and then we'll start recounting the wave. We will be expecting a new first wave according to our wave count. But we will not ignore other traders that will still call it a normal second wave, though it has cancelled the first wave. It's a high chance it may cancel it, but we will see. We will see. It may work beautifully so far, all right, because they are still building on the technology of blockchain. In fact, there are more cryptocurrency built on the infrastructure, so to speak, of Ethereum. We talked about it yesterday. This is another cryptocurrency. Ethereum, am I pronouncing it correctly? Ethereum, all right? So if you are in a cryptocurrency, you should know what I'm talking about. So there are more cryptocurrency being built from the technology of Ethereum more than Bitcoin. So there is a huge competition between Bitcoin and Ethereum. There is a high chance that Ethereum may take over Bitcoin. We will see, because we are talking about platform. See them like a platform. So we talk about Android platform. We talk about Apple Computers platform. Those are platforms, and the developers, these are technology, digital currency. So the developers will build on the best platform. So right now they are building more on the Ethereum platform, so to speak. All right, so understand that. So competition also between many cryptocurrency. So there will be a shakeout today. Probably we have more than 15,000. The shakeout will take place. The Federal Reserve intervenes. Central bank may start regulating them. They are volatile, so we take everything gently. All right. So right now, the second wave stopped at 61.8%. Using the fractal price structure of the second manual wave of the first wave of a high degree, we will say at 61.8%. Again, looking at the structure of the second manual wave of a higher degree, which of the second manual wave of the first wave of a higher degree, we will expect a zigzag. But we are 61.8%, but we don't see a zigzag here. We will continue to go beyond that 61.8% level. Anything is possible. Either a zigzag is possible, flat correction is possible, WSY wave is still possible, any type of corrective wave or combination, triple tree, double tree, all these are possible, all right? So understand the forecast about the second wave, all right? If finally, all right, the second wave has settled, all right? And the third wave is underway. Using a conservative measurement, the level that we need to watch, the first conservative target for that normal third wave will be at 23,295. Okay, using another conservative measurement, it can push it even to 25,767. But if it end up being an extended third wave, it will go far beyond those levels, which means it will go even to 200% or 261.8% or 314% Fibonacci extension level of the first wave of a higher degree. But one more warning I have for traders. Suppose, like I was telling you, we have another zigzag pattern that does not cancel the first wave of a higher degree. When we see that the third wave is underway, remember that that third wave must go above the level of 20,049. Otherwise, it will form what? The X wave. All right. So remember that we may have a WXY wave, which means a zigzag plus X plus another correction. So if we have an X, which means that third wave failed to go above that level, we will now, all right, expect another correction. Until that correction is completed, how many years it will take, God knows. Then we will, talk about the real and third wave. Another thing before we wrap it up, right? If, for instance, instead of having a flat correction, which I doubt, right? Instead of having a flat correction, instead of having a zigzag, we end up having a flat correction, which I doubt it, because we are now 61.8% level. So I doubt it. I may be wrong. He may print a flat correction. So if you start printing a flat correction instead of a zigzag correction wave, you need to drop down to the weekly chart like this and apply Fibonacci extension to the fifth manual wave of the first wave of a higher degree, and make sure you highlight the 138.2% Fibonacci extension level of that fifth manual wave of the first wave of a higher degree. So the fifth manual wave of the first wave of a higher degree is starting from the end of the fourth wave all the way to the top. So you will apply Fibonacci extension to that fifth manual wave of the first wave of a higher degree, and you will highlight the 138.2% Fibonacci extension level, a level that will determine the end of the B part of the flat correction. So this will conclude our discussion today about Elliott wave trader versus BitCoin wave forecast. I will be going a little bit deeper about this topic of cryptocurrency in the few days that will come. I hope you are enjoying this tutorial. Please let us know what you think of it. All right, are you invested in it? I'm not in it as a pro trader at all, because there is no regulation yet. It's all too speculative and anything is possible. Some people already have made a lot of money, but we will see what the future will hold for all those cryptocurrency, which one will survive the shake-up. All right. So if you have any question or suggestion, please put in the comment section. And in due course, I will be recording another video to answer your specific question. I always read the comment. You may think that you did not reply, all right, but I read them, and in the future we decide what kind of topic we will talk about, all right. So your comments are very, very important for us, all right. If this video has been truly useful to you and say, George, I like it, please let us know by giving us the thumbs up. All right. Don't forget. If you forget, come back again and let us know, please. All right. But if you think that, George, it has been a long video, too much blah 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 from your side, George, you are talking too much, then I'll say to you, it's good to talk, my friend. All right. But if you think it's long form video, we record a short form video sometimes. Sometimes we record a long form video. This is a long form tutorial. I want to give it to you all in one go. But if you think it's too long for you, you can break it down. You watch 15 minutes today. Okay, you know that tomorrow you watch another 15 minutes. By the time you know, you watch 45 minutes. I watch videos of 2 hours length on YouTube. Can you believe it? Sometimes I watch them in one go. Sometimes I watch them bit by bit. So long form tutorial, YouTube love them. Some traders don't like the video to be too long. I understand that, but we will record also short form tutorial. Okay. If this video is not useful to you, it's blah 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 for you, mark it down. Let us know, please. Let us know, mark it down. But if you think it's an essential tutorial that can help other traders, all right, help us, please. Share it with your friend on Google Plus, on Twitter, and also on Facebook. Are you a subscriber to our channel? If not, please subscribe to our channel. It's free. subscribe today. All right, we'll be recording more amazing tutorials. Even if this one is not useful to you, subscribe. You'll be surprised. We'll be recording more tutorials that you will like. Okay, subscribe to our channel and be sure to click on the notification icon. So anytime we record a video, you will be the first person to be notified. You do not have to watch that video, but you will just be notified. Say that George has posted a new video. You look at it and say, I'm not interested in this subject. Don't watch it. Okay, but don't unsubscribe. Okay, stay put. Okay, if you like it, you watch it. That's the good thing about the notification. All right, you know straight away that your favorite topic is now on YouTube, and you can go and watch it in your own time. All right. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about Elliott wave trader. This is a BitCoin wave forecast. Happy trading to you all, and I will speak to you soon.